While I'm being cautious about jumping to any sorts of premature conclusion, I want to share a few bullet points and some perspectives on how the coronavirus, also known as COVID-19, have impacted the real estate market. Before I go any further, I hope everyone is being safe out there and staying healthy. Danny Lau here from Lion Real Estate, empowering individuals and families with financial success through real estate. In light of the recent stock market volatility, school closures, supermarket cleanouts, I have been receiving questions from people regarding how the real estate market is being impacted under this worldwide epidemic, with the risk of jumping to premature conclusion. In short, from where I stand, real estate market has not been impacted, or if there's any impacts coming, any of that ripple has yet to take shape. You see, the recent volatility in the broader market has to do with a few underlying economic forces interacting with one another. The primary factors include coronavirus putting a lot of pressure on international traveling, the healthcare system, world trade, the education system, amongst many other impacted markets. Meanwhile, we also see the crude oil price fall through the roof due to OPEC and Russia failing to reach an agreement, creating a historical energy market breakdown. All of these have created secondary impacts. The Fed dropping interest rate to zero. Bond yield continue to slide as investors seek security in an uncertainty market. And people staying home in attempt to self-quarantine in order to mitigate the transmission rates of the virus. Housing market, fortunately, hasn't been in the direct line of fire under any of these factors. Sure, realtors are also now doing the best to keep social distancing. But here's a key takeaway. Real estate market and stock markets are historically uncorrelated except in 08 and 09. Take a look at this Case-Shiller Home Price Index graph, showing the appreciation rate of real estate in correlation to the stock market. You can see the movements of both asset classes are not directly tied together. Understand that housing value is correlated to other factors, such as population growth and the employment rates, where none of these are a major factor in the current epidemic. While the rest of the world is reacting to the direct impact of the virus and the secondary impacts of the epidemic, interest rates remain low, decreasing the cost of borrowing, all the while fueling a stronger demand in home purchases. As stocks become more volatile, reacting to weekly changing policies and bonds heading towards a negative interest rates territory, investors are flocking to other alternatives to reallocate the assets elsewhere. Home value and rental incomes are less volatile in nature. People always need somewhere to live. Beyond that, there's tax advantage to real estate ownership. And lastly, most real estate purchases are leveraged, thus magnifying investment returns. If you're an income investor, real estate now looks like a safe harbor, generating a decent, sustainable, and less volatile return. All of the above factors are creating the perfect storm in sustaining a healthy housing market. There's one key factor that I'll be keeping a keen eye on. How is the virus affecting the job market? If labor market loosens, mass layoffs start to take shape, a weaker economy where small businesses goes from boom to bust, then housing demand may decrease, leading to a housing market decline. A lot of this will depend on how effective the Fed's emergency policies are. Your guess are as good as mine. Lastly, real estate market is fundamentally local. If your town's economy is highly dependable on a particular airline employing the bulk of the town's population, this town's real estate prices may be impacted more negatively than others. Well, there's always a possibility that local developers' crew members get infected with the disease and new developments come to a halt. Who knows? 2 weeks from now, I may be sticking my foot in my mouth. If you haven't done so already, please subscribe to my channel. You can also set up a time with me to grab a cup of coffee so we can discuss how real estate can fit into your financial picture. And of course, if you enjoy my video, like it, share it, and tell other people about it. Family and friends, be safe out there and stay healthy. This is Danny Lau. See you next time.